Well, howdy there, folks, and welcome into today's video. We have a lot to get into in today's video. I got to show you what's going on in the market. Some very interesting things happened today that I need to bring to your attention, okay? The thing I want to talk about here at the front of the video is actually, I want to go big picture here. And I want to explain that we are currently in a financial crisis. Now, no one is calling it a financial crisis right now because we're going through it. No one called what we went through in 2007 through 2009. No one called that a financial crisis until it was already over. No one called it the Great Recession until it was already over. Once these things are over, people start giving them names and things like that. But right now, we are in a financial crisis. When we look back in time, we'll say, oh, wow, that was a financial crisis we were going through in 2022. And what we have right now is all the telltale signs of a financial crisis, essentially. When you start hearing about hedge funds going belly up, when right now, obviously, the Celsius situation, the Terra Luna, all those things, right? When you start hearing about all this, you're in a financial crisis. When people start getting liquidated, you're in a financial crisis. When hundreds of billions of dollars in margin debt starts getting taken off, you're in a financial crisis. And when it came to the last financial crisis, right, 2007 through 2009, there was a financial crisis that was very much in the real estate industry. It was also very much in the stock market, right? And you saw companies like Lehman Brothers go under. You saw, just a ton of names like, Fannie Mae, Freddie Mac, AIG. Like, it was a mess across the board. What we have going on right now is actually a financial crisis more in the crypto market. But it is a financial crisis nonetheless. A lot of people are being affected by this, obviously in pretty substantial ways, and it's causing overall a massive deleveraging of the system. In the crypto space, I mean, we've heard about 20-to-1 leverage and things like that. That's all going bye-bye right now. It's being completely destroyed. Some folks are being obviously 100% wiped out, and that's just what we have going on essentially at the moment, right? If you look at the NASDAQ and the Russell, they're pointing you to we're in a financial crisis right now. Both those babies are down 30% plus just since November, right? Which November was what, 8 months ago or so? 9 months ago? So when you start seeing the NASDAQ, the Russell down 30+% in a short amount of time, starts smelling like financial crisis, right? You look at the most probably famous asset in the world, honestly, other than maybe, gold, it's Bitcoin. Like, Bitcoin is universally known. I mean, you say that name and even people that don't even understand what crypto is like, oh yeah, Bitcoin, I've heard of that before. And what is Bitcoin doing? This baby's down, almost 58% year to date. Right? Ethereum, the second most popular crypto, is down 70% year to date. When you start looking at these sorts of moves and this deleveraging, you're in a financial crisis. What else do you see in a financial crisis? You see investors get ultra bearish. You see investors not believe in anything and investors start believing that things only go down. And this is the exact sentiment we have going on right now, right? Less than 20% of investors are bullish on the stock market the next 6 months. Overwhelming amount is bearish on the stock market over the next 6 months and believe this thing's going to keep falling for the next 6 months, okay? That is a telltale sign that you were in a financial crisis. What else do you see in a financial crisis? Well, consumer confidence leaves, right? This was a recent survey here of confidence in the economy, and it's at a 16-month low now at this point in time. But what's interesting is, I think this one's much more important because this one's been done since like the 50s, United States Michigan Consumer Sentiment that they do, right? And this is the lowest we've ever seen in history. And if you look, every single time you have a financial crisis, you get into this, moment in time where people just don't have confidence, right? And going out there and spending money and things like that. And that's something we obviously saw in the last financial crisis in a major, major way. But the only difference is this time it's even worse. This time it's even worse when it comes to consumer sentiment. So you're getting all the telltale signs of a financial crisis. It's just the difference is, and especially what's hurting consumers this time around, right? The last time average people got hurt because unemployment went super high, right? This time, what's actually playing out here is the average person's keep being hurt because of inflation, right? And so you can get pain either way, right? You can get pain because you lose your job, or you can get pain because you got a job, but you can't afford anything at the end of the day, right? Because everything's so dang expensive. And so we're in a moment in time where once you realize we're in a financial crisis, you start to say, okay, how deep is this thing? And that's all we're trying to figure out now. Like, how deep is this financial crisis? Is this something that we reach the bottom in 2022, or do we reach the bottom in 2023? And I think that's what everybody's trying to figure out right now. And yeah, it's pretty clear that you're getting all the indications that we are in a financial crisis right now. So wanted to cover that. I hope you guys enjoyed that as always. Now, looking at the markets here today, not a horrible day in the market except for the Russell. Russell had a really rough day out there today, but kind of a mixed bag from Dow, S&P, and the NASDAQ as well out there. Voyager, this stock's just a crazy stock. People are seeing some of these moves in a stock like this. People are just using that as like a trading mechanism right now. I don't even know if it's really people buying in because they believe they're going to make it through this whole situation. But just like, the stock was up 60, 70% today. And so, I'm sure there were people buying it before the close yesterday, hoping it blasted off. And today they made, depending upon when they sold, they could have made 40%, 50%, 60%, 70%. That's what people are using that as, for now. And they'll probably continue to use that for a while as just like a trading mechanism and, hopes that they'll make it through this whole situation will obviously help the stock. And then obviously if the momentum happens, you're going to get a lot of trader money going in there and paying attention to that and wanting to play it. That's just the way it is. And that's what's going on there. Okay. Shopify led a big tech down. It was kind of a mixed day for big tech. AMD's back into the $70 range now at this point in time, $77. Nvidia keeps dropping as well. But it was kind of a mixed day for big tech. You got some green, you got some red. But Shopify, so they just had their stock split today. That's why it's at $33 now. But what's interesting is that baby just fell. We were in a moment in time a year ago, 2 years ago even, when if you were doing a stock split, like everybody got really excited, and that was when we were in this euphoria market, right? The market's dead, and it's very clear. Like these stocks are moving on. Oh, there's going to be a split of the stock. Oh my gosh, we got to buy it up. Those things aren't moving these stocks anymore. No one gets excited about that anymore. This is not January of 2021. This is not November of 2020. We're not in that sort of market anymore. And so if anybody's hoping like these stocks are going to move because of stock split anymore, and if any CEOs are hoping and board of directors are hoping their stock price is going to move up because they're doing a stock split, these days are long gone. Okay. Now all it smells like is desperation now at this point in time if you're doing a stock split. Okay. Now, if we pull up a heat map here today, this is very much a mixed bag day out there in the market here today, right? I mean, there's green, there's red. But this is one of those days when the market just has no clue where it really wants to go. No clue at all, okay? Now, you know what is interesting? Banks. You pull up some of these big banks and, they're trading at multi-year lows. JP Morgan is at the same price today that it was in 2018, 2019. So there's still just an overall disbelief in the banks, right? And just people aren't confident in the banks right now. They don't want to take any risk in the banking sector. And that's just what we see playing out. Wells Fargo is at, if you take out the whole 2020 drop there, right? Basically, Wells Fargo is the lowest it's been in 5 years, right? 5 years, that stock. And these are massive institutions, JP Morgan, Wells Fargo. And, when you see that basically says everybody, Wall Street believes, big money believes, hedge funds believe that, we're either in a recession or we're going into recession, so they don't want to buy banks. And regardless if they're trading pretty much at the lowest they've traded at in 5 years, they still don't want to buy those stocks right now. And that's just the kind of sort of market we're in right now. Now, if you're into dividends and things like that, obviously the banks are an opportunity there. Now, something we do know about the banking sector, especially when it comes to big dogs, is the Fed backs those companies, right? And so I don't want to say insolvency is impossible for those sorts of companies, but it pretty much is. And the reason is the Fed has to back those because they're such big entities that even if you got into a big recession, even if people weren't paying loans and things like that, the Fed would just end up backing those because they're so big at the end of the day. And they matter so much to the overall financial system and the overall, not just the economy, but the confidence that, things are going right? And if we saw in the last financial crisis, they let some of the smaller dogs fall, right? They let some of those, and then they realized, oh my gosh, this is systemic, and we could potentially take down the big dogs. And next thing you know, who they helped? They helped all the big dogs, right? They made sure, JP Morgan had no issues, and Wells Fargo, and Bank of America, and Goldman Sachs, and those sorts of companies. And so, if you even got into one of those situations, the Fed's going to be there to bail out the day, just like they always are with that, because they have to. There's no other option to not do something, Now, of course, they're gonna do whatever it takes. Coinbase, oh boy, okay, this one's getting close to a 90% fall. Now at this point in time, just hit another low, under $50 for coin. Upstart just hit the 90% club, folks. Yes, it did. Upstart is now down over 90% from its highs. Wow. You know what this reminds me of? This reminds me so much of the tech bubble, right? Because that was a period when you saw countless stocks fall 70, 80, 90%. So, I mean, the interesting thing about this drop for so many of these stocks in the overall markets and everything that's going on is you almost get flashes of what happened in the great financial crisis, but you also get these flashes of what happened in the tech bubble, right? And, when you see these stocks down 70, 80, 90 plus percent, it's like, oh my gosh, man, it's insane. It's literally insane to see because you very rarely get these sorts of time periods when, you see stocks down 90% in a pretty darn short amount of time. This is just since November. So in a matter of 8 or 9 months, the stock has fallen over 90%. It's lost over 90% of its value. A firm is getting so close to a 90% drop as well. As of today, it's almost 89% drop on a firm now. This is buy now, pay later, direct play here. And when it comes to a firm, I mean, Wall Street's view of this is that people essentially aren't going to potentially pay back the money. And yeah, buy now, pay later, but we won't pay it back essentially. And so that's the view from Wall Street. Whether the view is correct or not, we'll see over the next, let's say 12 months, but that's their view right now. And when you see a stock down almost 90% since November, yeah, that's what Wall Street's view is now at this point in time. The hood is getting very darn close to a 90% drop as well. This baby is down 88% as of right now for the hood, right? And, when it comes to hood, they're not in financial jeopardy like maybe some other firms are and some other things that are going on because they got so much cash around on the balance sheet. What they are in for is just a overall massive drop in the amount of, I'm sure, trades that are going through on their platform, the amount of new customers being acquired. If anything, customers are leaving their platform because retail has gone bye-bye out of the market, right? I mean, think about it. Retail. From the retail side, it's a disaster. Retail 1 doesn't have stimulus money anymore. Retail 2 is getting eaten by inflation, so a lot of retail folks don't have that extra $300 to throw in Bitcoin that they used to, or $300 to throw in Tesla stock or whatever, right? So you can't acquire new folks because those folks just aren't there. And so they've left the market either because they have gotten scared of everything that's going on, or because they lost money, or because of a situation where they literally just don't have the money. Like, they don't have any extra money to put around. Like, when there was a stimulus money pumped out there and things like that, folks got in. Not everybody is built for the stock market, right? Or the crypto market for that matter, but just keeping it on the stock market. Not everybody's built for this. Not everybody wants to get into this thing, right? Not everybody wants to go through the roller coaster ride that is the stock market. Not everybody wants to put in the research work. Some folks, a lot of you guys that watch us, and shout out to you guys, you find this interesting. You like to keep up with the markets and invest for yourself and things like that. This is not the majority of people. And a lot of what was attracted to the market in late 2020 and early 2021 was a lot of folks that just got in it because they heard people were making money, and then there was stimulus money out there, and it was like, I got to get some of this money as well. And so a lot of people treated it like it was another casino, right? And they're not really thinking about where this company's going over the next 5-10 years. They're not listening to a conference call. They're buying the stock because, on Reddit, it's like the hot stock, and oh my gosh, this one they're saying is going to the moon. And that's just kind of the market we got into. Those days are long gone, and they're not coming back. Not only are they long gone, but they're not coming back for a long time. They will come back eventually someday, but that will be when next time we get in a euphoric market and everything's, going high. And even when the market starts to rebound from this crash we're going through right now, people will not come flooding back to the stock market or the crypto market or anything for that matter. And the reason being essentially is they're going to remember the pain, right? And so, that whole movement is not happening for a while. It happened in 2000. It happened a little before 2000, late 90s, right? It happened in 2020 into 2021, the beginning part of it. And, now you could be waiting, honestly, 10 years, 20 years before the next big influx of euphoria hits the market. And it will be when everything's at all-time highs again, and been at all-time highs and breaks through another all-time high and another all-time high, and everybody gets in this euphoric state. But the pain everybody's been going through, this will stay ingrained in people's minds for quite some time. This will not just magically leave, right? And so, yeah, any hope that, users are coming back anytime soon is just not realistic at all, right? If you pull up the travel sector today, a lot of pain. CCL down 14% plus. I believe they got downgraded today from somebody. RCL, I believe, just hit a new low. That went down over 10% here today. And then the rest of the travel stocks are down. And so when I see travel stocks down like this, my brain automatically thinks oil must be up. Oil must be up because that's generally how it's worked. Oil's up, these travel stocks go down. Travel stocks go up. That means oil went down essentially. And today, actually no, oil's down today. Oil and gas stocks were down today. So it's just interesting to see, kind of a buck in the trend, but for a negative standpoint, that those travel stocks, even with oil going down today, and all the oil and gas stocks, those travel stocks still went down. And some of those down big, like RCL and obviously CCL here today, right? Now, I thought I would show you guys this here. I think this is pretty interesting. So since 2000, the Dow is only up 183%. And that's just interesting because it's over 22 years of time has passed and 183%, which just kind of shows you the, I guess you can say, poor performance of the Dow over that time period. Like that's not good, right? You look at this and this is pretty interesting. And when you're going through a crash, weird stuff happens, right? And so, for instance, from the year 2000 to the year 2010, the Dow was down, right? Now, the interesting thing about that is it didn't go down in a straight line. Actually, for the most of the time, it went up, right? The Dow bottomed here around 03 and then actually made a great move up all the way until, basically halfway through 2007. And then boom, 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 fell. But technically, if you looked at the Dow from 2000 to 2010, it went down. It just didn't go down in a straight line. It was actually up and it was actually doing great for most of that time. It's just the way that decade finished out was bad. It was really, really bad. And so, just kind of something to kind of keep in mind there with kind of the indexes and things like that. I want to show you guys a great video, a great clip. I know you guys will enjoy this one here from the GOAT, Mr. Buffett himself.
I'm not recommending that people buy stocks today or tomorrow or next week or next month, but you shouldn't buy stocks unless you expect to hold them for a very extended period and you are prepared financially and psychologically to hold them the same way you would hold a farm and never look at a quote. You don't need to pay attention to them. And you're not going to pick the bottom and nobody else can pick it for you or anything of the sort. You've got to be prepared to, when you buy a stock, to have it go down 50% or more and be comfortable with it. There have been 3 times in Berkshire's history when the price of Berkshire stock went down 50%. 3 different times. Now, if you owed it on borrowed money, you could have been cleaned out. There wasn't anything wrong with Berkshire when those 3 times occurred. But if you're going to look at the price of the stock and think that you have to act because it's doing this or that, or somebody else tells you, well, how can you stay with that when something else is going up? You've got to be in the right psychological position. And frankly, some people can handle it psychologically. If you can't handle it psychologically, then you really shouldn't own stocks because you're going to buy and sell them at the wrong time. And
yeah, I just absolutely love that clip there from Buffett. And what's interesting is people always try to, kind of tempt fate, I guess we can call it, right? Where, he's basically saying, like, don't mess around with margin because obviously you can end up in a lot of trouble because even Berkshire Hathaway stock has gone down 50% plus at least 3 times in its history. Think about that for a moment, right? Berkshire Hathaway. So all these stocks, Amazon, Apple, it doesn't matter what stock it is, they can easily go down 40, 50 plus %. They've done it a million times in the past. They'll do it in the future as well. And so that's where margin gets very, very difficult. Next point he obviously brings up that I think is very, very important is you have to be psychologically in a place where you can go down on a position 50 plus % because as he stated there, it's going to happen. Even sometimes the indexes go down over 50%. That's something we saw in the great financial crisis. From peak to trough, every single one of the indexes ended up falling over 50%. Dow, S&P, Russell, NASDAQ, all of them fell over 50%. So you have to be in a you have to imagine if I'm putting $10,000 into a stock, like that could be worth $4,000 or $5,000. And even if you think you're getting on a good price, it still can happen. You can't control if a massive recession happens. You can't control if inflation's at 8 or 9%. That's out of your hands, right? And so there's certain things you can control in the stock market, like how much you put into each stock, how many stocks you own, how much research work you do, what type of balance sheets do you like when you invest in companies, things like that, right? Growth profiles and things like that. You can control that, but at the end of the day, you can't control if that stock's going to go up or down 50% over the next 6-12 months. And it doesn't matter what stock it is, it can go down 50%. It doesn't matter if it's the safest stock you think you bought in the world. It can still go down 50% plus. We've seen it play out before, and it won't be the last time this plays out, okay? And so I think that's just kind of a great understanding there. And obviously you got to be in a financial position to do this, right? And the best financial position for a stock market investor, at least in my personal opinion, the number one best thing is always have more income than expenses. Because if you always have more income than expenses, then you're always in a position to buy the dip. And you don't look at crashes in the market, bear markets. You don't look at that as, oh my gosh, I'm so scared. You look at that as an opportunity. Whereas other folks that don't have more income than expenses look at that and they're like, oh my gosh, this is awful. Somebody with more income than expenses looks at this and they're like, okay, this is cheaper. This is cheaper. I can buy this stock for way cheaper than it was a year ago. I can buy this real estate for way cheaper than it was a year ago. I can buy Bitcoin for way cheaper than it was a year ago, and Ethereum, and all these things, right? And so it's just like a huge opportunity to you. And so having more income than expenses is the key, in my opinion, in financial life. Like it's the biggest key, in my opinion. And always have more income than expenses. I've been doing that since I was minimum wage worker. Back in the day, I did that at Quick Trip and do that nowadays. Always having more income than expenses is the key to being a successful investor, in my personal opinion. Otherwise, you're trying to time things. And the last point he brings out that's very important is you can't pick the bottom. You can't pick the bottom. No one can pick the bottom. I don't care how much experience they have. I don't care how smart they think they are. No one can pick the bottom. And at the end of the day, if you see an asset that's a great price and you love that opportunity, you got to take advantage of that opportunity because you won't buy the bottom. I promise you that. And no one will. And if they did, they got lucky as a dog. That's all I'll say about that, guys. Much love as always. Hope you guys enjoyed this and have a great day. Oh, by the way, also, just so you know, I made a couple courses actually free for you guys that are interested. You can book a call down there with my team. They'll figure out if to put you in the beginner course or the intermediate course. Those are absolutely free. You don't have to sign up for my private stock group or anything like that. So it's pretty darn awesome. That is pinned comment down there. I figured, why not do something like that in a rough market? I know people are trying to learn and different things like that. And I feel like, there's an opportunity out there. So much love and have a great day.